If you'd
All
like to
right,
call the meeting to order and get us started.
we will call the meeting to order, and Brandon will start with a roll call.
Mr. McLaughlin,
I'm here.
Mr. Woodall,
Here.
Mr. Hudspeth.
Here.
Let's see, I'm looking at my list, trying to call you in order. Mr. Jackson,
Here.
Ms. Smallwood.
Here.
And Ms. Dorn.
Here.
Everybody is here.
Perfect. All right, so over here to do is our annual review of the audit as provided to us by Tammy from McDermott and Davis. So let's get into this.
I don't know if you all just want to start with questions and kind of go through that way, or just kind of a high level overview first.
Why don't you give us a high level overview first?
So overall, once again, good internal controls, so no management comments either in the current year or the prior year. So those controls that we tested as part of the audit were operating effectively. Overall, the district has good financial position and stable reserves. One minor change this year compared to last year is this year, the only fund that qualifies as a major fund, so with a lot of activity, is the district's general fund. All of the other capital projects and debt service funds are considered non-major this year. So they're just all combined into that non-major funds category. So at the end of the year, the general fund had 1.8 million in unassigned fund balance, and that's the amount that can be spent at the district's discretion. And overall changes in fund balance, general fund decreased 480,000. Again, because you have those healthy reserves, spending some of it from year to year as you've accumulated funds for capital and other projects, still good within compliance as far as controls. Then if you all want to get into any of the details, go over any specific questions.
I know Gary's got questions.
Right.
So we're going to defer to, I'm going to defer to Gary right now. Go for it.
We start?
Please.
Okay. I'm on the agenda, page 3, which is when you print it out after the agenda.
Okay.
There's a letter from McDermott Davis, and in the middle of the first page, page 3, it says we have the following significant risks. I'd like to ask about those.
Right.
Where are they in the audit, and what are some examples, and are there some specific impacts?
Okay, this disclosure is relatively new. So what we do as part of our audit is we consider risks that could impact the district. And the two that we've identified here are very common among all audit organizations. So there's kind of always your inherent risk that management could go around your established internal controls and circumvent those controls. So we've identified that as a risk. And then as part of our audit, we do testing, like journal entry testing, some detail testing, to make sure that we don't have any concerns related to that risk. There were no concerns, management override. It's just something we identified and required just some special audit attention. And with improper revenue recognition, that's one that's kind of, you always have a risk that, are you recognizing revenue as it's earned? So we do detailed testing on revenue and assessments. And overall, once again, no concerns related to those risks that we identified at the front part of our audit. Make sure that we tested those during our audit process.
Okay, that is a concerning statement.
We can modify and add some wording to that if you'd like, to indicate that there were no.
I would like that.
Risks.
Yeah,
That's helped at the sport, have we?
It's never been, I looked at last year's audit, it wasn't,
No.
this letter is new.
Right, this part of that letter is
Yeah.
new. So yeah, we can definitely add
It's
some more
concerning.
wording to clarify that, although there's, as part of our audit planning process, we identified risks, but no concerns in the
Well,
results.
Here's the corollary. If you'll go to page 24 in the audit, in the middle page, it says, we do not express an opinion on the effectiveness of the district's audit control. So it seems like you did express an opinion and called it a significant risk. And then the next paragraph in the middle of the page says we didn't find any deficiencies, which is what you just said.
Right.
Same for page 25 in the middle of the page. there were no such findings. And near the bottom of the page, section 10.554 requires that we communicate any recommendations to improve financial management. We did not have any recommendations. So it seems to be a disconnect. I know it's legalese, but I don't see a connection.
In my experience, and I was gonna ask a question, and I think you guys answered it. In my experience, prior to the beginning of an audit, the auditors would come in and say, here are the significant risks that we identify broadly. And then we're gonna go test these risks. And then are there any other risks that you think we should be testing as well? It sounds like that conversation wasn't had going into this audit.
It's more our internal planning, identifying the risks, so kind of looking at
That'll
overall.
get you in front of this conversation. These are the things we're gonna spend our time focusing on because we think this could be significant.
Yeah.
It's the way I think,
Yeah, and that's
so am I
kind of
understanding it the way you're describing it?
right.
Yeah.
Yes, in my world, it's you're taking into consideration that these are relevant from concerns of the area. So these are two that pose a relevancy in this area. So I think maybe just a wording change.
Yeah,
Matt,
expand.
you said, you had a good word. You said these could pose significant risks.
Right.
Yeah.
Can we use that word?
Yes.
These
Wait,
could.
wait. We're talking about hypothetical here.
Yeah,
So what are we're gonna, they'll try to come from hypothetical? We could have somebody vessel. That's a risk.
oh, yeah.
We could have a fire. That's a risk.
Well, and it's
When do you stop? It's a slippery slope. I
Is it-
don't think
is it
that's
a
a place.
requirement?
We're just required to disclose what we're considering significant risks. So things that could pose a significant risk that then we're addressing with our audit procedures in our
It's a
audit
good thing to
testing.
Jack the Dynamo.
I'd like to see the audit for that.
But there's specific testing that you perform
Yeah.
to cover off on those.
Right,
things.
and we can add in that wording there to say,
I like wordsmithing. I think that's just a slippery slope. I think they should be removed completely.
Oh,
That's
okay.
my opinion.
Is it legal to leave it out?
I know that's my question.
it's one of our requirements that we're required to communicate what we've identified as.
But you didn't say so last year.
It's a new requirement,
Oh,
All right, so what are you
That
gonna
is one of the-
massage to so we can make that
Yes.
acceptable?
yes, add in some wording to make it very clear that
What will
this
the
is more
wording be?
planning. We identified these in planning, we tested, nothing came as a result of.
could you
Yes, sir.
also point back to page 24 and 25 where you specifically say there were no
To
risks
kind of reference
identified?
the
We
management
don't
letter
have
that
any
we have now.
recommendation?
I think that should be right under the significant risk statement.
Point
That-
back.
Repeat that language underneath the risk statement, so it's right there as a reader reads it.
Okay,
So I don't have to go find page 25 to see this
okay.
disclaimer for the hypothetical that we're posing here, which I think is crazy.
And while we're looking at risk, did you guys look at the adequacy of reserves?
As far as an accounting basis, yes, as far as fund balance carry forward. We don't necessarily test your reserve for replacement, those type of calculations, that's more internal management. We're just more looking, do you have funds set aside, cover your operating procedures and you're within general requirements there.
So,
Alright,
you're okay with it?
Yeah, as long as we,
If I can just take a moment. Everyone, Stephen Bloom just walked in. I wanted to make sure we have some new committee members that you all recognize who he is. Stephen, you're welcome to join Tammy at the table if it's easier with your laptop.
I'm more comfortable, sorry, I was online.
well.
No,
Stephen,
yeah, he
you're-
was on the phone, but I just wanted to make sure y'all knew who walked in.
Okay, it'll be recorded.
Yeah,
Okay.
just turn on the microphone so it's recorded.
Thank you.
All right, so Gary,
Yeah, so
next question.
I'm on, audit page 5, the page numbers are at the bottom of the page. The single line paragraph at the bottom of the page says the general fund balance decreased 480,000, like you said, due to increased expenditures. What's missing is something that is a point to another table on another page, which was in the last one. I would like to add, after increased expenditures, as shown in the statement of revenues, expenditures, and charges in fund balance, government funds on page 11. I like to have that reference because all the pages kind of blend together.
All right.
And it was in the previous, agenda. Point back to where that, I can look for the increased expenses, it's on page 11.
Okay.
And then the title. Page 8 in the audit, oh, go
So
ahead.
is it, so Brett, if you don't mind,
No,
as you're going through this way, because I have a question on this page, and we can just take it.
I meant to say that.
Okay, okay. So this is just a clarity so that I understand what this says. On page 6 of this audit, it says the district has $10,535,000 in bonds outstanding. And that ties back to a note that's back on page 22.
Mhm.
However, doesn't tie anywhere to any numbers I could come up with inside the actual statement, the statement of net position. The statement of net position is showing a 10,281 as well as the due within 400,000. So can you describe that difference?
That difference, if you look on page 21, it's probably the easiest place to see it. That within the non-current liabilities on page 7, we have the 2 outstanding bond issues, plus the unamortized premium and discount. So that total ending balance, page 21, that 10,681,337 ties back to the, on page 7, the 400,000 current plus the due in 1 year of the 10,281,337.
So it's about, I'm sorry.
No, how do we get back to the 10?
Yeah, so that it's, how does that, so that gets me to the number that's on the statement of net revenues. And now how does that then get to the number on page 22 and then back on page 5, the 10,535?
The 10,535 are just the 2 bond principal amounts of the 3,315,000 and the 7,220,000. That if it's easier to, in that capital debt paragraph on page 6, also indicate the amount of the unamortized premium and discount. It makes it easier
I
for
think
you
it
to
would.
do that total and then
I think
you
it
kind
would.
of describe, or we could even add in, if it's easier to follow, a table there to kind of summarize the amount, basically summarize page 21. So you can
Yeah,
see.
you bridged in a couple different places, you know, there's a difference between this and this. I will have another question about that coming up, but this one, I think they use the bridge. I mean, it's not terribly material, but it is different. Stuff to get you.
Yeah, you could also put in there excluding, you know, it's 10,000,005 excluding, yeah, that's as shown on the page.
That was my question on that.
Right, and I meant to say that, Matt.
Okay.
that,
Well, as we proceed through, how about page 7? Where are we on that?
I don't have anything on page 7, but I'm gonna go back to page 4.
Okay.
My mistake. Under the 2023 column, the very first item is current and other assets. 8 million ends in 808. So I compared that with page 9. Page 9 under total assets. It's, the difference is $12, and it may be due from the general fund. But why isn't that $12 added to page 4, current and other assets?
Page 4 is summarizing the activity on from page 7, so the net statement of net position. So on page 7, because that's the district as a whole, that $12 interfund is essentially eliminated, so it nets to 0. So that's why you're seeing that $12 difference in the 8,140,808 on page 4 compared to the current assets on page 9.
But you also see it in the liabilities as well, right? There's the.
Right,
Yeah,
there's
so
that same.
And that is both the.
Comes out of both.
Okay. Everyone satisfied? Okay. My next question is on page 8, so is there anything on 7, 4, 5, 6?
Good 8.
I think it's page 8. Nope. Oh, yeah, that's just a general question. Jack, you may be able to answer this. On page 8, charges for services, 277,000 and change. But the expenses were 439. Is it just cost more, or did we not charge enough for services?
The charges for services number on page 8 in that column for the general government is your general fund special assessments, as well as the right-of-way fees are in maintenance and operations. So we kind of allocate your general fund special assessments to the various expense categories based on the amount of expense. So looking at the general fund statement, part of the variance where your charges are less than expense is that in the current year, you did use some of your fund balance in the general fund. So in that sense, you didn't charge revenues greater than your total expenses for the year.
Makes sense, Jack?
Yes,
Okay.
we
You know what you expended. I'm just
we
asking.
spent a lot of money.
You spent a lot of money, but we didn't charge you. All right. I don't have another question till 11.
All right,
Yeah.
anything on 9? Anything on, Matthew, you got some?
So now on 9.
How about 10? Anything on 10? On to 11.
Okay.
I have a general question. This might be more Brenda, and it comes up in the reconciliation back to the budget and that schedule, but it doesn't really talk about what caused that. So there was a change in the budget. There was a reforecast, and it doesn't really explain what happened. So this almost $500,000 or 500,000 keeps appearing, and you can see it on page 11 as the deficit. Is there a quick answer to that?
What number are you looking at, Tina?
Well, I'm looking at you have a deficit in the general fund. And, this number, it's a little bit different, but we're going to get to a schedule where we reconcile the budget. And it shows the budget changing from the original budget. And it's around this $500,000.
Yeah, it's page 13 is the budget to actual that
Right.
kind of showcases that number.
So my question is and maybe this isn't the forum to answer this, but what happened that resulted in the final budget being different and then that resulting in this deficit in the general fund?
Okay, so 2 pieces to this, and again, probably can talk about this more, during the meeting, but the budget had to change because the actuals changed. So again, if you spend $1 over what your budget is, you have to amend it. And that's really only talking about expenditures. So had to amend the bottom end of that. Now, the top end of that is that there was a budgeted use of reserves planned as a function of using up the assessment reserve that was on the books, and you used a little bit of each year to help balance out your assessments so that even though your spending was going up, you weren't having to increase.
Yeah, the assessment stabilization.
Yeah, we did
So
get rid of that account. And Tina, I can answer that question. We did a budget amendment at the beginning of this fiscal year to reconcile all of that. And the amendment itself, so we had budgeted $100,000 as a contribution to reserves. We ended up needing to add about $421,000 because of all the projects that we expended money on. So we added that $421,000, and then we just added another $76,000 to the road and street facilities, things like road cleaning, street lights. So we ended up amending the budget by $497,000 to account for that shortage in the original budget. We had money for it, but on the budget itself, we didn't take in as much revenue as we expended. So we needed to amend our budget in order to collect for all those expenses that we had.
Okay. So there wasn't some major event that happened that required us to change that. Okay. Thank you.
Yep.
Brenda makes sense. Yeah.
So
Well,
still on page 11 then?
Before you go there, yeah, I don't wanna go back and catch something, but I missed what you're going. It's back on that, earnings statement, and it's page 5. And my computer's close, so I can't afford it. Just an observation, the maintenance and operations there is up from 3.4 to 4.6. We've had a change in position of over 2 million, 2 years in a row. I don't know how long we can do that. We've got $1.8 million in reserves or whatever it is. That just seems like a big increase in maintenance and operations, and that deficit running at that level. And some of that's depreciation, obviously. A good portion that's,
Yeah,
not
almost,
cash.
yeah, almost
So we still
2.6.
could understand what the cash is there. You know, if we keep going at this level, what does it look like? What's our runway?
I saw the exact same thing. We've been down 2.5 million for 2 years now,
Yeah, 2 years.
because I looked at it, but that's a question to ask the supervisors. We can't solve it.
No, but someone got to put a stop to it. I mean, I don't know if we can continue. It's that increase,
So I can tell you, we do have a budgeting workshop on the 17th, so
17th of,
April.
oh yeah.
You can't have 50% increases in
Oh, we
maintenance and
no,
operations.
Yeah.
That won't work.
I wasn't
I,
gonna bring it up.
I gotta say,
That's a risk. I mean, there,
Yeah.
you're worried about risk, a hypothetical risk. This is a real risk that's developing if we don't change the trend.
we've had some major contractors. Sort of
I'm sure.
landscaping,
Everything
as far
has
as
gone up.
going out there and doing a tree service contract. And,
So what I'm looking at is you're right, you have to amend your budget to reflect more actuals.
exactly,
Or mitigate in other areas.
okay.
Yeah.
Let's pay for supervisors.
Yeah.
We can't get any lower.
Well, but Mike is right. I saw the same thing, but it's something that if you want to take a note and bring it up and schedule.
I think it should be addressed because it's a glaring trend that I think, I didn't go back another year. I didn't try to because I didn't have the documents. But
I did, and it was way less. It was just a few 100,000 in 3 years ago.
So it's a 2-year trend.
But then we've had huge
I
inflation in
don't
2
think I can
years.
catch that.
Okay, bring up the meeting. All right, so
So I'm on page 11.
page 11 then.
Special assessments on page 11, the first line. It's titled special assessments, but the exact same figure, that number 3196922 is the same as page 5. And it's titled, oh wait, let's see, 3196, where is it? It's in the paragraph, I think.
Or if you're looking at the total, the 4 million number of total special assessments
Oh,
is charges for services on page 5. I don't know if that's where you were seeing the same numbers.
yeah. Okay, also, the same number appears on page 8. Page 8, which is under charges for services. How come I'm not seeing it? Maybe I don't.
Were you seeing the 4030903? Because
That
that's
might
where
be-
Oh,
it is
yes.
on page 5. and
Yes.
Also, you see it on page 11.
That's it.
Some of the columns.
403.
Yeah.
So why is it called charges for services and here it's called special assessments? The same number with 2 different titles. Thank you.
Some of it is the type of financial statements, so the government-wide, the entity as a whole is the one where it's classified as charges for services, so that is page 8. And then page 5 is a summary of page 8. So on the government-wide, you classify your revenues under more broad categories, so you've got charges for services, your operating grants and contributions, capital, and miscellaneous. Where the fund statement, which is page 11, that goes into a little more detail on the type of revenue. So that's where you break out the special assessments as assessments, the right-of-way fees and investments and other.
Well, but on page 8, that whole column is called charges for services, 4.03 million. Just seems, if I was a member of the public, I'm looking at the same number with two different titles,
Can you put,
it doesn't match.
can you put a parenthesis or an asterisk by any of that stuff in the note with
Can
it?
you put a note to explain why you have two titles for the same number? Can you explain that?
I'm trying to think of where would be a good place
At the bottom of
to,
this page,
Which
Yeah.
page?
of all three pages, page 5, 8, and 11. So anytime I see the same number with two different titles, I get confused.
Tammy, maybe it's just a matter of putting an asterisk or a superscript 1 for charges for service and tell them that that is a different title, but it relates to the benefit special assessment shown on a different page. I mean, that might help everybody understand it's the same number, it's the same thing, but it's classified, like Tammy was trying to explain, it's classified as a different description depending on which report she has it listed on.
And one more time, line, is it a different title?
that page 5 and page 8. Those are your, what's called your government-wide statements. So that's the district as a whole. It includes all of your funds kind of in one total number. And those statements are on what's called the full accrual basis of accounting. So that's more what you're used to seeing in for-profit business type accounting, where you've got capital assets and long-term liabilities on those statements. Whereas page 11 are your fund statements. And those statements are on the modified accrual basis of accounting. So that's focusing on current financial resources and current expenditures. So that doesn't include any capital assets or long-term debt
Well,
on those statements.
all three, on page 11, they're all classified as revenues.
Right,
But on page 11, special assessment means to me as a homeowner, that's what I pay in taxes.
right.
So I look at that 4.03 million and I say, well, that comes out of my taxes I pay every year.
Mhm.
But charges for services sounds like I'm charging a contractor an amount to provide a service. But it's the same number. I'm still confused.
Well, can't we just put a footnote down there that due to differences in accounting methods, that this particular thing is also found on page 8 and 11 entitled something else?
How about you put at the bottom, charges of services include assessments, interest. Bottom there,
That's good.
And which page would that be?
the government wide.
So on this statement, page 8, what you're thinking.
I think, well, there's a couple places actually, if you,
Yeah, it's 5, 8,
5,
and
8,
11.
yeah. Anywhere anywhere where you switch to government wide.
I would put it on all three pages.
I don't
5,
know.
8, and
I don't know if it can put on 8. Is that just a generated sheet there?
It is, but it's kind of linked within Word that we can do some modifications.
I think we just have to put a footnote that says it's different language in this pages.
That's what I'm looking for.
Yeah.
It's not that one includes other figures because it's the same figure. So one page can't include some things and exclude others. It's all the same number.
But is this important? The average reader is not.
No,
Sorry.
This is
Not-
noted in note 1 at the bottom of page 14. And it's talking about program revenues. In item 3, it says operating type special assessments that are treated as charges for services. So you'd have to look for it to have it explained.
yeah,
There you go.
maybe you could point back to note 1 on page 14 and specifically what paragraph. I'm just, yeah, you're right. Nobody's gonna look at it, but it's confusing to me because special assessments to me means money collected from the public.
We get nervous when we see them.
But when you
You set a high bar.
But charging for services is something totally different. That's a contractual figure. It's a revenue, but it's different from assessments from the public. I'm still confused, but I recommend that you put an explanatory note on all three and maybe point back to column 1. All right,
All right.
I have a related question, because on page 8, There's right-of-way fees for 1.041 million. For the investment and other revenues, is your investment loss and other revenues in your breakout of 474. But that 29,837 isn't included.
Emily, what page are you on?
So between 8 and 11. So kind of still comparing against the two. So on page 8, we have investment loss and other revenues of 474,040, which is under the general column of the investment and other revenues on page 11. But it does not include the non-major funds, whereas the special assessments that are outlined on page 8 do include the non-major fund of 833,000.
Oh, good point.
In the non-major, that 29,000 is the operating and capital grants and contributions on the interest line. So the debt service fund interest is coming through as operating grants and contributions, and any capital projects funds interest comes through in that capital grants column on page 8.
So my related question tells me that the page 11 statement is obviously a year change and it threw all of us. Because my related question then drops down to the maintenance piece, which you bridge on number 11 on page 12. The bridge is there where it's missing almost $121,000. That is a capital expense. I mean, you did explain it. I was thinking, what world, where'd that money go? But can you explain again, as though I've never done this ever before, why this statement is so different in so many places than the statements that preceded it up to this point in the financial statements?
Yes. So page 7 and 8, those are the full accrual basis of account. So all of your long-term assets and liabilities are on page 7 and 8. So those are the government-wide statements. Whereas pages 9 and 11, those statements are the fund statements. So things like your capital purchases show up as expenses on the fund statement on page 11. But on the government-wide statements, those are capitalized as assets. So your reconciliations on page 10 and 12 are there to provide the differences between the two statements.
So, and is it accurate to say then that the fund statements, the funds themselves, because there isn't a balance, what I call a balance sheet here. There's not a balance sheet for the funds. You're essentially just tracking cash in and out as it's going through those funds. Is that more like the goal of what you're trying to get done there?
It's more the current, so yes, it's mostly cash receivable. So page 9 is the balance sheet of the funds, where kind of as you alluded to, there's no capital, no long-term assets. It's just current, what's happening right now.
Yeah.
So that's more of your budget, kind of governmental operates more on the focusing on the fund level.
Yeah.
As what money's coming in, how are we going to spend it, how are we budgeting for it? Whereas then the government-wide shows the picture as a whole with what's the value of my total capital assets? What do I owe long-term in debt or other liabilities?
That's explained in the MD&A on page 3 at the
It
bottom.
is. It's explained. I mean, it was explained early on, and you've got the reconciliation. I'll use the language, Gary, you used, which is if I'm an average homeowner or an average constituent, my goodness, it's going to be hard to get to that, right? So yeah, and I don't know that there's anything can be done about that, but it clearly threw a wrench in the analysis that we all do. So just for what it's worth.
As a general question, the format has been the same for 3 years, so each page format, does that come from your accounting firm or is it coming from the district and then translated to you?
That we keep this kind of as a base Word document and then make updates year to year
I
as
know that,
things that
but
change.
the original format came from McDermott Davis.
It may have come from us or when we
It's-
first took the district.
Yeah, I mean, it's pretty standard across all auditing firms. I mean, there is some auditing guidelines require certain things to be within an audit. Most of the firms have elected and very, I mean, I can 5 or 6 firms we use, and it's this, and certainly the schedules are that.
Mhm.
But to your point, the hardest part to explain to anybody who doesn't do this is that concept that your government funds are short-term and government-wide. I mean, even when we bring on new accountants, I'm telling you that we have to, and it's a hard part to kind of work through. And you certainly, if you're picking up an audit once a year, it takes a minute or two to kind of walk that through and go, wait a minute, what are we doing here? And that's why there are those extra pages in here that reconcile the two.
I'm still on, if we're moving on, I'm still on page 11. I think that's where we, yes, left off. In the middle of page 11, there's an interest line, 421,000 and change. Why is that? Why is that not the same as the interest on page 22? Am I off base? Debt service?
Page 22, those are the future, so that schedule is the amount of interest. So the first line there, the 408,490 is what would be due in fiscal year 2024. Whereas the amount on page 11 is the interest that you paid during fiscal year 2023.
Page 22 is future interest.
Right, so that's the table on page 22 is breaking down your future debt service requirements, principal, interest, and then total.
Anything else on 11 then?
Yeah, I have one more question. Why is the non-major funds column on the previous audit for 2022, it's on page 11. I wrote this 3 days ago. Why is the non-major funds the sum of 2021 capital projects and non-major added together? I know we got rid of that column for 2021 capital projects
That
because it doesn't exist.
in fiscal year 2021, that fund qualified as what's called a major fund. So it had over 5% of either revenues, liabilities, assets, or expenditures. So in that case, in 2021, that fund was required to be reported as a separate column within the financial statement. So then we would report an opinion on that fund level, whereas in fiscal year 23, the activity in that fund was much less. So it no longer met the criteria to be reported as a major fund. So that fund is now included in that non-major fund category.
Okay. I'm moving on to page 13 unless somebody.
Anything on 12 first?
So I'm looking at in the middle of page 13, there's a line item for capital outlay. It's 125,000. Why is it different on page 12 and page 13, capital outlay, two different numbers?
The numbers on page 13 at 125, those numbers are the budget numbers. So those are coming from the budget. The actual amount on capital, the 120, is included in the maintenance and operation total of the 4,763,000
That's the
number.
That was my next question was, did we have no capital outlays? Because we budgeted for it, but. So you're saying it was just different classification on page 13.
So what is the number of capital outlay of 12? What does that reflect the action?
That's the actual amount of assets that were capitalized during the year.
Got it. Yeah. All right. But it doesn't show up on page 13. It's not necessary to be on 13 actual.
And she says various maintenance numbers.
My question's why?
Yeah, that's is it budgeted in the wrong place or is it, yeah.
I asked that question 2 years in a row, so I quit asking. you.
Okay, well, I'll take that for you.
Go ahead.
And some of it is breakdown if we were gonna separate capital outlay on page 13. We'd also wanna show it separate on page 11. The alternative is we could include that 125 budget for capital outlay in the maintenance and operations budget item.
As a result of me asking that question 2 years in a row, on page 12, that's one that new sentence appears.
Oh.
Outlay is included in maintenance and operations. That's to explain the answer I got.
Okay.
That's why it's there.
You're trotting on well-trod ground.
Yeah.
Do I really understand? No, but I got a sentence in there that it tells.
Well, I didn't
me why
even
it's
capture, I highlighted that since, but it's still left me.
different. But thank you for reiterating something I was curious about.
All right, anything else on 13 then?
I don't
14,
know.
15,
No.
16, 17?
Yes. Near the bottom of the page, there's a paragraph called reclassification. Certain reclassifications have been made to the 22 financial statements to conform to the 23 statement. Do we have some examples?
Like the non-major change, that because in 22 it was shown as a separate fund, but this year it's in that non-major
Yeah.
category. I think we added that wording in
helpful
last
then,
year,
then?
the year before,
That's
Would
my next
yeah,
question.
would that be helpful to add that explanation?
to say including the
Yeah.
change.
Yeah.
Go ahead and describe the change
Okay.
as you stated, because it leaves me hanging to say, well, what was reclassified? Tell me.
Anything else on 17? 18,
No.
19? Like 20, whatever that is.
I have a couple questions on 20.
Well,
The
that's
first
what-
one is, why is that construction in process staying the same? I know that it's Island Village, but it was the same number at the end of last year. And none of that infrastructure is in service?
Jack, Jack is on the board, so and Gary comes to all of our meetings, so he understands. We're in the process of, the district has not received or accepted certain items for phase 1A and 1B. The engineer and the attorney are working on that. I think the only thing that we've accepted is the Celebration Boulevard extension. So yes, Tina, to your question, they are continuing to work. The district has not accepted those improvements, so they have not been assets placed into service.
Okay. And then my second, I'm sorry,
Go ahead, Tina.
my second question is, we have accumulated depreciation on additions, but we don't have any additions. You know, like looks like we're missing maybe equipment, but we have 120,000 of additions and we have 2.5 million of accumulated depreciation.
That addition to accumulated depreciation is depreciation on all assets. So on all 76 million of assets for the current year, the addition to accumulated depreciation.
Oh, I see. Okay. It just
That's-
looks funny. Yeah. Okay.
Say, roll back one page and just the investment listing, chart. Jack, I see you guys got into treasury bills and, with Pro has 2. I see your term is 6 months average. We're rolling out 12 and ladder. And you got CDs.
We were supposed to ladder them too.
I don't know if we have or not, wait a minute. But the CDs, I don't know what your return rate is on those, but I'm guessing the treasuries might be better. Might want to review.
Okay.
We got those CDs one off there.
All right, anything else on 20? 21?
So, sorry, this is just a curious question. So on page 20, the infrastructure addition, the 99720, is all Island Village, is that correct? Is that what I understood from
Don't think so. I think the Island Village portion is the construction in progress.
the, okay,
It was the same as last year. And it was all Island Village.
okay. What's the 99 infrastructure?
Pardon me?
The 99,720 on page 20?
Oh,
So if you look at, just,
Yeah.
I'm not answering for her, right?
Yeah.
But it sums with the improvements to the 12968, that was the
Oh,
part
the
that was buried in the maintenance, the capital outlay that went in maintenance.
Okay,
So
thank you.
just, that's where the number came from. Now,
Yeah,
what is
I don't know
That's
what
a
it
different
is.
question.
Yeah, that's fine. It's,
somebody in the district would have to tell you what it is.
Okay, page 21. 1 through 4. 22. 23.
Yeah. Please, what is that?
Right, the 23,
Oh, yeah.
the rent agreement.
The last paragraph. In the middle of the paragraph, which is included in the statement of revenues, expenditures, and charges and fund balances at investment and other revenues of the general fund. Because you did this in other areas, I would say right after general fund, as in located on page 11,
Page number.
because you've done that references in other areas. Sorry, it's just minor, but you know, it's a long title, but if I go to page 11, oh, there it is.
Scroll back a page, just to note 7. And following out that significant line bill assessment. Is that Disney? I think I ask that every year. So who is that?
That would have probably been Mattamy
Yeah, that sounds
Yeah, man.
mad at me.
Oh, okay, for the, okay,
for Island Village.
okay.
This came from the previous.
I was just curious, but I didn't think Disney had that much land.
Yeah.
Yeah, it didn't make much sense to me to see that number there.
All right, page 24, right toward the end of it, and
No,
anything at 24 through 27, then.
yes.
Go ahead.
Page 25. Jack may know more. The bottom of page 25, specific information, item Bravo B, total number of independent contractors paid last month was 21. That's the same number of 21 as listed in the 2022 contract. Is that true? You have 21 contractors?
I have no
I
idea.
know.
lucky number 21.
Is it? I mean, I'm just kind of wondering if this is like copy
Brenda.
paste.
A roll forward.
Brenda, help us out on this.
Could it be copy paste?
Probably, I mean, we're involved in the same work efforts and the same maintenance that we've been doing for years. Now, we may have changed, for instance, landscaping. We may have changed a particular vendor, but we probably do have 21 various vendors that we deal with on a day-to-day, annual, month-to-month basis.
I would agree with you, but I didn't know because you have the same work, the same contractors, they change names,
We changed names a lot.
but,
Correct.
and then, 13, that's all
Okay,
on that page,
okay, 26 then.
yes. So there's a line item for special assessments. How come that's not the same as the special assessments on page 11? It's off by $5,000 in change. It's a title that I'm concerned about. The reason I asked this question in last year's audit, and they made a change because it was wrong. So B, the total amount of special assessments collected, that sounds like a taxpayer, was 4.025, when on page 11, it's 4.03.
I can look
That number
into
rounds to 4.2.
variance. I know those numbers we get from,
Well,
So
that's
that's, yeah, and the other one,
It's for 30,903. There's nothing abbreviated. Page 13, it's 3,196,000 and change. So I've got three different numbers on page 26, 11, and 13 with the title of special assessments. And here it's defined as collected on behalf of the district, which means taxpayers. So why is that number the same as special assessments on page, isn't the same as page 11?
You're gonna pay your taxes.
25, 5,000.
I think I know what.
So what is
the
that
difference
number?
in the number, and it needs to be,
Yeah, it's probably that direct piece.
yeah. I think that direct piece is included, but should we include
Yeah,
it?
we should include it. Yep. I'm gonna have Sergio check it.
Yeah,
Could you-
that direct billed amount is what we directly bill to Crow. They're the only ones that we direct bill.
What about page 13, special assessments is 3.196 as the actual amount. So how come the actual amount isn't reflected on page 26?
So I'm not gonna try to, but the answer is if you look at page 11, and you look at the header on page 13.
Right.
Page 13 is just for the general fund, which matches the special assessments you see under general on
Yes.
page 11.
True.
And then it doesn't include the 833,981 and not major that's on page 11. So page 13 is a subset of page 11. Is the mathematical answer to your question. Now, again, I
Okay,
can't.
good. So what should the number be on page 26 for special assessments?
That's everybody.
Thanks.
Yep.
That we're going to look and double check that we think the number on 26 right now does not include the direct collect assessments. So not on the tax roll assessments. So
It scrolls down in the tax rolls.
Yeah,
We're
just-
doing them there.
filter.
Yeah. That makes sense.
It's just 55A there.
Always watch it. You have to be bilingual to understand.
Right.
I don't.
Well, that's a different answer from last year. I trust you, but I just wanted to reflect. And the definition is here, collected on or behalf. So explain why that number is different than another page.
Tammy, can we add, whether by tax collector or direct collect the total amount and then list the 4030? Or do you just want, is that note specifically in regard to only tax collector collected assessments?
It should be.
It should be
everything.
everything. I mean, these
Okay.
are rather new sections within the audit in the last couple of years, and there's not a whole lot of specifics coming out of the auditor general on some of this, but my interpretation has always been it's everything collected. Again, by or on behalf of the district is my key in there. We'll
Right,
confirm the number.
So then you throw the directs in.
I'm
there.
gonna throw, yes,
Yeah.
I'm checking, have the accountant check it, make sure I understand that what's in there, but we're gonna
Agreed.
include the direct in there as well.
agreed. And maybe that note B can just say
Does
whether
not matter.
direct collect or tax collector. But yeah, it should be the total. I agree. Thanks, Stephen.
Thank you, because there is a difference, and that is the difference, so I appreciate it. I'd just like it to read correctly. I don't have any others.
Okay. Michael, do you have any?
I have one kind of off-topic question for you. Jack will appreciate this question. So the outstanding bonds are like about 10 million right now,
Right.
10.5, whatever. There's a possibility that the district may be looking at issuing some bonds for some potential projects. Can you provide an opinion or give us some methodology to think about what the capacity of the district as it sits today is for additional financing or additional debt leverage coming from?
Some of that all depends on what you're willing to assess, since your bonds are generally secured by special assessment debt. So what are the,
I'm afraid you're gonna say that. You can't do it just from a balance sheet perspective and the income statement.
Is there a maximum number based on our assets?
What the community's willing to bear?
Would you look at our, yeah, I know the community, as long as the community's ready to go infinity, then you can do that, right?
But don't you have to
So you
base
don't
on?
care.
you'd have to have,
Collateral?
I mean, to be able to get
Collateral's your
bonds
fault.
issued, you'd have to have some
Yeah.
sort of
So is there a
revenue.
maximum?
Yeah.
Well, maximum, well, there's a maximum, but it'd be beyond.
And it's a
Yeah.
building, 1.8
Yeah,
billion.
we can do whatever, it's just unbelievable.
So.
I wondered if there was some other
Yeah.
restrictions that you would look at just from a financial containment, not
When
necessarily the
you issue
revenue.
bonds and debt, since it's generally special assessment bonds, it's secured by whatever special assessments that you're levying. They're not, you know, general obligation or any
So
other
you don't
type
look
of
at balance sheet
bonds.
ratios
Correct.
or anything,
Hmm.
That's
not
more,
relevant.
more bond.
I'd love to run a
Yeah.
business like that, where I could just assess my customers.
Now,
Yeah.
you do have a legal bond validation max amount
Correct.
that you.
And I'm trying to find that.
Yeah, meaning you get, you start a district, you validate, you gotta go through a court system, all that fun stuff, and you validate 100 million. You know, if you reach that 100 million, then you gotta go back through the process. I mean, so there's that, but in terms of that, it's not like a business where you can look at your assets, you look at your revenue sources, what can you achieve, what's the market say, you know, all that good stuff you're thinking about. It's just not that way.
Brenda, if you could come up with what that untapped number is. Cause Gary and I used to have conversations about that when different things would come up. And
Okay.
Gary's.
Sure. I
There you
think I recall it's 63 million, but that was back in 94. So give me,
Very good.
y'all keep talking. I'll try to look at
Yeah.
our files and see if I can find to make sure.
Gary's memory was like 150 million, if I remember right.
The original validation?
I think that was what he thought was remaining, unissued, so to speak.
Oh, unissued,
Yeah, you're thinking about like treasury stock, that means it's not
So,
unissued,
I wonder-
authorized.
unissued plus what's currently issued. Oh, then where'd that number come from?
I don't know, but there's a number, so that's, if we do something, we don't have to go through the legal process, there's this authorization, this, I think about like treasury stock even in this issue.
It doesn't change any of the other assessment processes, all the other good stuff. You still have to
Yeah.
public hearings
Got an
for,
issue.
but yeah, there's that top level legal, you
So it
know,
sounds like
ceiling.
There's an existing piece of paper that granted us a top level number. We got to
Correct.
find it.
Anywhere close. And see if it, I mean, either of the numbers you threw out are significant. It's out there right
Yeah,
Yeah.
but some bonds have been paid off over time.
Yeah, paid everything off to Tuesday's bonds.
So there's some
Which,
other,
which doesn't matter. You add up all the bonds that have been issued, and if there's still less than what we originally validated, then we're good. If we want to issue more than what we've been validated, we simply go through the court system and basically sue the state of Florida to go to circuit court to be able to issue more bonds, which is a process that we've done. So not hard to, let me, hold on, let me try to find it.
Yeah, it's time consuming, but not, you know, restrictive.
Not impossible.
process.
It's, you literally go in front of a judge. It's
Yes.
interesting.
Standard process.
Yeah, it's about-
Interesting.
Okay. All
I
right,
have one other
Matt.
issue.
Okay, Tina, go ahead.
I'm sorry, did I cut you off? I apologize, Jack.
No, go ahead, Tina.
So I saw the published timeline for, you know, the consideration of incorporation, and this is a question for the auditors. At what point do you start discussing this in the financials as a, you know, going concern issue maybe, or a change in entity? At what point does that get triggered?
As far as considering the district getting incorporated as a city, that
Right,
the,
because what doesn't apologize for my ignorance, but I would think CCDD goes away, right? As an
Well,
entity?
not really, not right away, because CDD still holds all the bonds. So we will survive for a while.
Okay. Maybe
And
that's the
so-
answer to the question, Jack.
The time frame you're talking about, the last thing I saw on our agenda was that the earliest that we would go to a referendum would be 2026.
November.
The first, what's it? That'd be November 2026 for a vote. But before that, it's got to go through Florida committees. And any one of these committees can shoot us down, just, we don't want to do it. So we're way in advance of trying to do any bond issue for some of this.
I thought incorporation was dead.
I'll tell you what, from my perspective, it is, because Crow has elected not to relinquish any of the parks and stuff like that. So that really kind of does that, but we still have to go through the exercise.
Complete the legal requirement.
Yeah.
We do. Yeah, there's a poison pill there, so.
It pretty much doesn't. All right, Matthew, anything more?
I don't have anything specific about the audit itself. It's more process related, right? This is, we're many months past this fiscal year, so it took a long time to get this together. Are we bumping up on a statutory requirement for the issuance of this audit? I know last year it felt like we were 2-3 days out.
We did this the same time last year.
Last year was in September.
It was the same, yeah. Same
We're
thing.
early, this year it's March.
Okay.
Last year you met like March 24. So
Yeah,
close to
March.
when it needs to be
Oh.
filed, correct?
Looking at that.
That was my question. Is there a reason that the auditing of the financials takes 6 months after fiscal year? In terms of a timeliness, fashion?
Some of it's just the volume of activity and allowing the district time to close their books. They need at least a month after to get all your payables and everything accrued. And then they have to do their final reconciliations and then get us the time frame. So it's relatively common, a 6-month turnaround.
And to Matt's point, are we getting close to any cutoff or regulatory?
June 30th is when it has to be to the state. We like to have this done now for the bonds. We submit these over to the trustees and compliance is, but really this, the state's, June 30th is the big one that you'll hear is for.
Yeah, your bond, your trust indenture says it has to be done 180 days after the close of your fiscal year, which is today. And actually, Jack, you were here. Today is this district's 30th anniversary,
Well,
right? What a momentous day. But yeah, so normally it's March 30, but because
Where's
it's
our
New Year.
cake?
where's the cake?
Where's our cake and cookies and sodas?
And the 180
Hey,
day,
she brought pizza earlier in the month.
Well, that was then, but this is now.
I know, sorry. I'm behind. I'm a terrible
and
human.
the 180 day requirement is for the audit committee to meet to review the drafted financials?
No, the trust indenture doesn't reflect or doesn't reference an audit committee. It simply says, according to the indenture, that the audit needs to be complete 180 days, and it has been. Now, this district is the only one out of the 80 that I've worked with over the years who has a separate audit committee. This district, very involved community, very intelligent people like yourselves. This district wanted a separate committee. Normally, if you guys didn't exist, Tammy would finish her audit, Stephen and his staff would review it, we would review it. We would simply bring it to the board for them to review and accept. But they have asked that you as a committee ask your questions and review the audit with your expertise. And then you make a recommendation at the end of this meeting to accept the audit, recommend the board accept the audit with the changes that y'all have discussed that Tammy has noted. So they've added that additional step, but yes.
All right, so we completed item 3 on the agenda. Oh, item 4 is recommendations of board of supervisors.
I recommend
You make a motion.
make a motion to approve the audit with upcoming changes that will be incorporated.
Okay.
I second.
Okay. Any discussion? Okay, all in favor?
Aye.
The motion passes. Thank you. On number 5, other business and committee member comments. Around the room, anybody have anything to say? Tina, anything?
No,
Okay,
Well, sorry, newer to the audit committee this year. I think we came in that night. Reviewed the
Last year, yeah.
prior year financials. So do we meet outside of this past year? We have not met. So there's no like planning
No.
or kickoff to the audit.
no, Brenda will send you an audit. It's just like Santa Claus getting the list.
That's what it felt
Once
like.
a year.
Emily, I will tell you, the other reason that we would have the audit committee assemble is when the engagement expires. We've typically done 3-year engagements, but now we're able to do a 5-year engagement. What we will do is we will assemble the audit committee for you to authorize us as staff to solicit RFPs. We'll give you the evaluation criteria. So you will meet once to authorize us to solicit those RFPs, and then you will meet again to review those RFPs again making a recommendation, as you just did with McDermott, making a recommendation to the board, and then we will take those RFPs to the board with the committee's recommendations to select the auditor. So those are the two reasons you will meet. Every 3 to 5 years, you can meet more often if you want, but every 3 to 5 years to select the auditor, and then every year to review the audit.
And Brenda, we're only in the third year of the contract now, aren't we? Second or third year?
I can look. I think it's Tammy, do you remember, is this the third year, or did we extend it a year?
I think it's the third year, but I thought it was a 5-year contract, wasn't it?
No, I think this one's a 3-year.
Okay. So we may be coming up for an RFP then.
We might.
But is the contract 3 or 5?
I'm gonna see if I can
The
find
current
out.
contract.
I think it's a 3-year.
I thought we just approved that. 2 years
That
ago. we
was-
approved
It was 2 years ago. Yes, this would be a third year.
Coming up, not now, but
But
next
coming
year.
year.
So I think the next fiscal year will be
As we
however long the
get to
contract is.
close, I'll complete that one. Award.
But we re-up with McDermott, Davis
And it's just consecutively
consecutively. Yeah,
been 10 years now. Or
It's quite been that long, but it's been a while. And I think at least 2 proposals, I suppose.
yes, 2 cycles.
There could be some activity late this year possibly if everything gets moving with the master plan. Bonds are gonna be issued, start to think more finances. And some commingling with PRO. PRO has a finance committee. It's very active on a regular basis. And this group would probably function as finance committee too, with the board, I think, in terms of that financial transaction. Because this is where the expertise lies. I happen to sit in the finance committee over at PRO, so I know my
big double credit.
I think I'd be conflicted out.
Yeah.
Yeah, total refusal.
As you, real. But that, believe me, that's going to be an interesting process, right, Jack?
I would,
It will be an interesting version.
on the section for other business and committee member comments, I would take those 2 questions, recommendations from Mike and make those specific
Your board.
to the board.
I don't think it'll happen this year. I mean, everybody's pushing hard.
One,
I think it's gonna push into next year probably. Calendar year.
you wrote them down. I don't remember both of them, but one was about treasuries.
I'll be
Recommendation
available.
Treasury versus CD.
CDs, and we had another recommendation early in the. And I remember you wrote it down.
I've got it in here. I think
Yeah.
that's good.
So that would be the 2, I would say, official recommendations to take back to the board, in addition to we approve the audit with changes.
And Tammy, we'll see the changes for the next
Yeah.
meeting, for the
Probably have
board.
it. We can probably have the changes updated next week.
Okay, would you all like to see a copy of the changes?
Yes, please.
Okay, can we send the drafts and people?
Jack, I trust you.
It'll,
No, it's.
It'll go to Brenda.
it's a- it's a-
I want detail oriented.
Whether you read it or not.
And there's an April 17th budget workshop,
That is a budget workshop, yes.
so your maintenance and operations question.
Jack will go after.
oh, that was it. That
Yeah, it was the trending, continuous trending.
Oh, yeah, the training of $2.5 million
30%
loss
Yeah, it was
for 2 years now.
pretty hard.
I think that was the other question that should go to the board. Thank you, that was it. The maintenance and operation thing.
I don't know if it's a question, but it's just an awareness that.
Yeah.
We've got a trend that's developing. It's not sustainable, probably.
Somebody between you and Brenda can figure out where it went.
It's not my pocket, it's gotta be Brenda's.
Wait. What am I figuring out?
I'm sure it's increased contracts, expenditures.
Brenda, did you find how much bond capacity we have? Did you find that?
I found a resolution from 1994 that authorized 64,355,000.
That's the number.
And how much do you think we've issued in grand total? 10 right now outstanding, another 10 maybe through the cycle of all the villages and everything. Had to be fixed.
But if they're paid off,
So it doesn't, it's not like a line of credit. If you've issued it, even if it gets paid off, you do not get the capacity back.
Yeah.
It doesn't work that way.
really?
It does not work that way.
Oh. Too bad.
Whatever you validate, yes, whatever we've paid off, let me, well, if you want to keep talking amongst yourselves, I can look at all the bond issues and add them up.
You could always send it to us too, but yeah, with the villages, it has to be a pretty big number, right?
I can.
My
Well,
like
actually,
is
phase
70.
one was $63 million. So whoever mentioned 150 million to be validated, that might be more correct.
What you actually said.
Yeah, give me a little bit so I can look that up. I'm looking through some really old records, so if you'll allow me either by Monday to tell you what's validated and how much we've issued.
Perfect, and
Okay.
send that to Jack so he can take it to the board, because it's
Yeah,
nice
good
to
to
have that document in hand.
That would be good to know. I'm sure the rest of the board is not aware of that.
You know,
Correct. I can tell you what all the bond issues are for. I just didn't write down on my little cheat sheet. I did not write down how much those were.
first thing you're gonna ask.
Yeah.
And you'll
I
have
should have
it
been
on-
prepared.
I wasn't aware they extinguished quite easily.
Yeah.
I thought just
Can
recycle.
we find,
Just have some good conversation with Garrett.
well, can we find a state or federal rule that talks about it's extinguished? Can we prove that? Rather than just hear
So
something?
Stephen, what do you know?
Yeah.
I've always said, like you said, that once you use it, so that it prevents districts from,
Snowball.
yeah, pay it off and, without
Like a
any more.
Ponzi scheme.
Yeah.
Correct.
But we can always check with the bond attorney or
Correct.
counsel.
Or I can find my original paperwork. Maybe it is spelled out in that, but yeah. It's not like your revolving credit card. When you pay it off, you can blow it up to another 15,000.
See, and you don't know Gary Moyer, who's passed away. Gary authored most of the CDD language in the state of Florida.
Oh,
Originally, so he's the
Yep, yep, yep.
godfather. He did the villages and everything else, so. Yeah,
Yep.
somebody, Gary knows.
He was one. Yeah.
You created.
Created
Yep,
CDD.
I worked for him for 25 years. It's hard to say.
I know.
All right, so. Last item.
Well, I just wanted to say thank you very much for
Yeah.
being here and answering.
Tammy, thanks
your
so much.
expertise.
Good job.
Welcome.
Great job.
Emily, thank you. Matthew, thank you. Gary, Mike, Tina, just as well. Stephen, thank you for coming by. Brenda, thank you again for setting it up.
Sure thing, no worries.
So do I have a motion to adjourn? So moved. Motion carries.
Thanks, everybody. Y'all have a great day and a happy
Oh,
Easter.
I see.
Thank you. Happy Easter, everybody.
Happy Easter.
Yeah.